Vaibhav. I welcome all of you to today's session of Visual JForex, in which we are going to talk about the volume weighted average, the VWAP. This is part of the ongoing MA series, the moving average indicator series, in which we are trying to see how we can utilize various indicators which are based on the moving averages to build and deploy the automated trading systems on the JForex platform. For that, we can develop these algorithms on the Visual JForex platform developed by Dukascopy Bank SA. And today we will see how we can use this volume weighted average price, and it is simply the average price weighted by the volume. So the calculation formula is also pretty simple. You have to take the sum of the average price which is multiplied by the volume. So you have to take the sum of the price multiplied by the volume, and that sum needs to be divided by the volume, and you get this volume weighted average price. And for us the calculation will be done by the automated setup, so we don't really need to be bothered with the calculation. All we have to be bothered with is how we can find a system, find or and build the system which will find the maximum profitable trade for us. Of course, nothing is like 100%, and what we need is basically a system, a setup with more probability of ending the trade in profit than in loss. Now, to build an automated setup, you have to use this Visual JForex platform, and here we have these indicators listed as per various grouping. We have done Bill Williams indicators in the earlier sessions, then we moved on to the MA series, and now we are in the fag end of these MA series indicators. We will see this volume WAP in today's session. So here comes this indicator block. You need the start point for the system to initiate the trades, and start point can be any or all of the three: on candle, on tick, or trade event. You can then use this indicator block here. If you anytime if you feel confused and see what this volume weighted average price is, then all you have to do is click this info block, and you will have this brief info. And for more clarity, you can always do the search on the internet, and there you will get the calculation formula as well. We have to define these four input values: the default instrument, the time period, the shift. Shift is the look back period, and the time period on which we want this calculation to be done. And here most often we take this default instrument as the Euro USD. In today's session we will take the default instrument as USD JPY. So let us change this. You can use any of the instrument listed here, and all you have to do, if it is listed here, just take the start value and save it, and there it is. Your default instrument has been defined, USD JPY. Let us plot this on the chart as well. So here this is the chart, hourly chart for USD JPY, and now we will add the volume weighted average price. Indicator quick search. Here we have these volume weighted average price. Okay, here it comes. Now we have to define the time period values here. The default setting has been on 14. So let us again go back on the board, Visual JForex. Here now the candle period needs to be defined first. The candle period can be anything starting from 10 seconds to 1 month, and it depends on which time frame you are trying to design the system. So for example, in today's session we will try to create the algorithmic setup which will be based on the indicator with time period of 30 minutes. So all we have to do is choose the time period as 30 minutes, and shift is the look back period. If you keep the shift as 0, then the current value is taken into consideration for the output. If you use say 5, then 5 candle periods will be gone in. The output value would be of the time 5 candle periods back. So we will be going back in time, and at that point in time, whatever is the WAP VWAP output price, that will be taken into consideration. So that's what the shift is for. Then coming to the time period, on how many candles you want to use for the calculation for finding this volume weighted average price, you have to define this parameter. For example, let's use this as 50. Now we plot the same volume WAP indicator with same input values on this chart, and we will need to edit here. The average price can be anything of the input price. We have to define if we want close price, open price, high price, low price, or median price, typical price, weighted close price. So here, depending on which type of input price you take, you will have the different output values. Let us observe these on the chart. When I make this close price as the input price, the indicator output value has changed somewhat. If I choose low, it has gone lower. If I choose high, it will go higher. Okay, so here you can observe that median price, it is in between the high and low price. So depending on what type of applied price you choose, we are choosing the closing price. So that's how this volume weighted average price will look like when we are using the closing price. Here we have to define that in setting, and here it is already defined as the close price, and the offer side also bid. So we have the same setting on the charts now. Okay, now we change other parameters. We need the time period at 50, so we change this to 50. Okay, so that's how it will look like. And now we want the chart to be half an hourly. And we have the look back period defined at 5. So what will happen whenever we are taking that particular output for any further condition or for further calculation at any point in time, whenever the current candle is open, the output value will be 5 candle periods back. So here in this case we will have to go back 5 candlesticks back, and that will be 1, 2, 3, 4 and 5. So here I think no, it will be like 1, 2, 3, 4 and 5. So 2.5 hours back in time we will go, and current time is 7 GMT. So we will have to take into account the 4:30 GMT is the output value for the VWAP, and that point in time we had this output value of 106.859, and that will be the value which will be taken as the output, as we have the look back period defined at 5. Now how to use this particular tool? We can use this indicator for defining the trend, the underlying trend. If as is the case with most of the moving averages, we can simply see if the volume weighted average price is on the rise or it's falling. If it's on the rise, that is indicative of the fact that underlying momentum is on the bullish side. If the volume weighted average prices are falling, that will mean that the underlying momentum is in the bearish territory. So that way we can use simply by looking at if the last candle has closed above or below this volume weighted average price, and since it is volume weighted, we also get to know what kind of volume is happening at right now, and we will see that every day the volume calculation is started afresh. So the base is always new and limited to only that day in time, and that also preserves and makes it easy to do the comparison for that day's intraday price volatility, and it is backed by the volume. So if you see the volume is accelerating for that particular day at that particular time, that will be a signal that some new activity is taking place, some fresh momentum is going to build there, and that's the utility of this particular setup. And also, since it is volume weighted, we also get to see if any particular trend is backed by a substantial amount of volume or not, and that is also additional benefit of that. And then we can see if last candlestick has closed above or below that. We can also go with a formulation where we use multiple VWAP indicators in conjunction with even other tools as well. So what we need to do is try to get to a setup which will give us a good idea. We can even use multiple volume weighted average price indicators on the same chart, doing the same technical analysis, and all we will need to do is add further volume VAP blocks to our automated setup and do the output values comparison. You can take any number of volume weighted average price, and of course you will take only what is required as per your setup, and the setup needs to be defined by ourselves, and for that we need to do the necessary calculations and observations, and then also extensive historical testing to see if particular setup is going to be profitable or not. And for that we can do this comparison between various output values. And of course, whenever you want to do the comparison between various output values, make sure that input values are of similar class. The time period should be ideally the same, and shift can be different. Shift is like going back and forth in time, so you can keep the shift value different, but there's a time period also. If you are doing the comparison between the lower time frame and the higher time period values to determine the crossover kind of structure, you can keep these values different as well. And one more thing is you can even draw the envelopes simply by using different applied prices like high price and low prices. So there are multiple ways in which you can use this volume weighted average price, and all you need to do to arrive at a profitable setup is build something, see if it's working or not, and then go ahead with it if it's working. And if it's not working, then again do some optimization, do some modifications, and see what is the setup which is likely to be profitable both logically as well as historically. So that's how you come to the use of any indicator, and there this volume weighted average price is really a helpful indicator, and we have to see how we can utilize it to the best of our advantage. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. And now today is the Friday, so I would wish very happy weekend to all of you, and see you back on Monday. Goodbye.